Okay, and we're live. Hello, everyone, and welcome. My name is Jessica Grootman. Thanks to Sundown AI for our panel today. We're going to be talking about the impact of AI and automation on companies. So we'll be exploring lots of different business impacts. The panel here represents a number of different industries and areas of expertise. So before we jump into questions, why don't we do a quick round of introductions? So let's go around and give a couple of sentences on who you are and your experience with AI and your background. And then we'll jump in. I also should note that one of our participants, Jonathan Gazdak, is dialing in on the phone. So you can't see his face, but he will be participating nonetheless. So Jonathan, why don't we start with you?
Yeah, thanks. So my name is Jonathan Gazdak. I am an investment banker at Alexander Capital, and what we specialize in and what we've done is we've helped specifically AI companies raise capital and know the space and what investors are looking for from the type of companies, both from the technology of the AI company, but also the whether they're doing machine learning or whether they're doing speech recognition, any of that stuff, or more of the high-level type stuff, where investors look. And as everyone knows on the call and everyone listening, AI is the new VC private equity darling over the last 3 years. So that's me, and look forward to the panel.
Great. Prashant?
Hi, I'm Prashant Kumar, and
Prashant, do you want to continue?
technically I'm an engineer, but I belong to a... Oh yes, can you guys not hear me right now?
No, we can hear you. I think there just might be a bit of a delay.
Hear you.
Okay. Hi guys, I'm Prashant, and I represent Flipkart.com. We are the largest online retail company in India, and currently over the last few years in a very strong battle with Amazon. And over the last year and over the last few years, we have been investing very deeply into machine learning and AI to be able to really problem solve multiple facets of the problems that we encounter day after day in online retail using the deep learning techniques. Personally speaking, I have primarily invested myself into two phases. The first phase in which I led the entire customer experience of Flipkart.com is engineering, in which we were working a lot more depth with data and text, with the infinite amount of data that was coming from all the channels that we could imagine. Over there, we had tried to put in our own ecosystem of intelligence, which was allowing us to do better things at scale. Post that, I moved on to take care of probably the Flipkart's most critical part, which was our homepage itself, in which I am currently leading the advertisement and monetization apart from merchandising, wherein we are trying to understand very deeply about users and to figure out their activities which can actually lead us to create a win-win ecosystem in which customers really get what they like on the homepage itself to really increase the conversions at the end of the day. That essentially is a summary, and I think it's a great day because from an MIT Technology Review, we just got selected as the only company from India to be like the top 50 smartest company in the world. We were just having a small good time today, thought of sharing, and a lot of it is actually driven by the AI work that's going on right now in Flipkart.
Very good.
That's
Congrats.
pretty much, that sums it up.
Justin.
Thank you.
Hi, my name's Justin Magruder, and I'm a partner with Noetic Partners and also the president of a new automation firm we're starting up called QuickLab. I've been working for 25 years to help a number of large Wall Street banks automate investing, risk management, sales and trading processes. Have been involved with some of the high frequency trading solutions that have made Wall Street more efficient. I've been involved with a number of organizations who've been involved in trying to manage their risk better around understanding market signals and accelerating their ability to react properly to situations, and also helping companies to understand who their clients are, who their counterparties are, who they're doing work with, and all of this around automation. Recently, I've begun to work with the ISO technical advisory group around ISO 8000 and ISO 22745, but in particular 8000, which is a standard around master data and quality of data that's used for automation of processes. We're talking about supply chain management for large manufacturers, energy producers, and others who have a lot of problems because of manual procedures. So we're trying to help these organizations automate their programs and save money at the end of the day. Maybe improve efficiency, but really save money and really drop to the bottom line. So that's been my experience with primarily financial and supply chain automation.
Excellent. All right, and Carl. Okay, that's very helpful. So as you can see, we have a number of industries represented here. A few minutes, I guess, about myself. I'm principal analyst with Tractica Research. Tractica is a research and advisory firm that specializes in AI, as well as a few other interaction automation technologies. And I have done a lot of research on deep learning, and I'm actually working on new research now on consumer-facing AI, as well as the application of AI in a number of different use cases across 28 different industries. So hopefully today we'll be able to kind of fill in the gaps on some of where we see the trends going from the enterprise perspective. Before we get into that, though, and I think this actually is very relevant for a lot of companies who are trying to wrap their minds around this, my first question to the panel is, what are we even talking about? What is AI? How do you all define artificial intelligence, what it is and what it is not? Feel free to jump in.
If I can just jump in, I think the first thing I'd say is that it's the product of a lot of incremental technology. It's not a single transformational concept. It's decades of progress that we've made, beginning with the introduction of databases and interfaces, and as we progress technology to service-oriented architectures and real-time interfaces between systems. It's the incremental improvement and the sort of aha moment that developers or product managers and business people have when they see things that can be automated one step further, or when they have a vision of a client being able to turn on a light switch remotely, or being able to adjust some setting on a system without actually having to touch the system. And it's that moment when people realize that they can do more without having to do it themselves manually.
Prashant, do you have any other thoughts on that?
You know,
I think
I'll say from. Yeah, go ahead, Prashant.
All right, thank you. Sure. I mean, I'll actually add on to what Justin has beautifully presented around the evolution part. But if you were to simply break artificial intelligence into artificial and intelligence, I mean, the first thing, right? Artificial intelligence is actually a what, and it's not a how. There are techniques, there are objects to arrive at there. But since the beginning of when databases started to come in, when, as Justin mentioned about the architecture and the services, then we started to get into intelligent systems. I mean, the very basic primitives were probably rule engines that we wanted to come in with the logic. But as the scale increased and as the data kept on getting more and more enriched, backed up with the power of machines that we have seen has gone more and more powerful in terms of computing, we were able to do a lot more work far more intelligently, which we couldn't have done with the assistance of a simple logic or a workflow, is when intelligence evolved into the artificiality. And that's where beautifully the machine learning piece comes in, which essentially is the how list. That, okay, here is what the task that you give it to a machine, which can really do a processing fast, can read into trends that otherwise you wouldn't have been possible to, and that creates the artificial angle into the intelligence, is where we eventually arrive at. I guess that's exactly what I will add into what Justin mentioned.
Jonathan, I think you were jumping in before that.
The thing I was going to add from an investor perspective, or the way funds or strategics think about what is AI, to your question, is it's really replacing anything that needed or needs human interaction right now. And it's not always about removing costs, but it's also about adding efficiencies to people and workplaces productivity, right? So as an investor, I think if I have these 30 people, what can I do to make them more efficient? And if I use any of the AI technologies, does that make that group more efficient? And if so, how does that look on an ROI basis? I think straight up that's at the most basic level what investors think.
Yeah. I think that's a great point. I think in many ways it's sort of the next evolutionary phase of connectivity, right? We've sort of connected and digitized more and more systems and products and things, and now we are asking, what can we do with this data? How can we achieve greater ROI? How do we make sense of all of this? The only other thing I'd add from a Tractica perspective is that we really think about it as an umbrella term, AI, that is, including things like natural language processing, including computer vision, including, of course, machine learning, machine logic, machine reasoning. So, in many ways, I think these boil into three big categories. We're giving machines the ability to see, we're giving them the ability to read, and we're getting better slowly at making sense of bigger, darker, unstructured data. So from that standpoint, I wanted to ask the panel, what are some of the problems that you're exploring in using AI? What use cases are you working on? What criteria do you look for in these use cases that make AI a good fit, a good solution for processing these data? Feel free to jump in.
Sure, I can get started.
I'll jump in. I did it first last time. I'll do it again this time. And I think the thing that we're helping our clients with most often now is accelerating the pace at which they can adapt to changing market conditions, whether it's in the investing world, whether it's in the we're doing a lot of work now in the energy business with some large energy producers who are having trouble given the last several years of energy prices, and so we're helping them to figure out ways to reduce costs, and that involves automating primarily supply chain and production programs, so that if we go back to Edward Deming and sort of quality measurement, so that they don't have lots of capital tied up in inventory sitting in warehouses, so that they don't have delays to projects because of unanticipated errors. They're learning how to measure the quality of solutions they have in the field, and failure rates and decay rates of systems and products, and learning how to specify those products and services, and so that they can accelerate the integration of their businesses and the business systems, and reduce downtime and reduce lost productivity. So we've implemented, for instance, a system with some of our partners that is around the ISO 8000 concept. We're calling it QuickLab, and we're helping to help industrial purchasing agents, for instance, reduce the errors in the identification of products and services they need to acquire by the use of this ISO 8000 prefix concept. It's a way of simplifying the data that's used to identify products and services that large companies buy billions of dollars with every month, and they make a lot of mistakes. And so how can we reduce that rate of cancels and corrections to orders and order processing? And it's all around data and the straightforward use of data for identification of products and parties with whom we do business, and just basic concepts. But that helps our clients automate their procedures and reduce the errors that they have, and really reduce their costs. Prashant, I'm sorry I cut you off there.
Sure, yeah. No problems. I think this sets us up for a very certain order of going through, so we won't be cutting. So yeah, so I would actually, share my experience, especially because I was into building them instead of actually collaborating or actually integrating. I'll cut this entire thing into three parts, right? The first part is about actually the efficiency bit that we talked about in terms of automation and having to do with less people. Second part, which I call as a process intelligence. And in the third, I will add things which are like, you can put as many people you want. You can put an army, but you cannot solve for it. And that's where the machines come in picture. So let's pick up the first example where it's simply about how many people we require. And I'll take you an example of, let's say, so Flipkart customer care, right? Back in the day, like 3 years ago when I was starting it off in terms of technology build system, we were like 6,000 people strong. Out of them, like 300 people were just supposed to be looking into all the social posts and trying to act upon it, that if somebody is talking negatively, then register a case and solve for it. We put down something which we called as like a two-staged ecosystem of sentiment analytics and virality index. So we went ahead and said that nobody is interested from customer care to read something good about Flipkart. My job is to look at the ones where customers are trained, and a sentiment analytics ecosystem was able to reduce my workforce by like 60% because a large number was positive, a large number was spam. And immediately, because now they don't even need to read this, they were able to increase the efficiencies by 60%. And the second beautiful thing what happened was, so we have a lot of these flash sales and all the online retail constructs. Something will go wrong and a lot of people start to talk. Then we really needed to understand whose problem we solve first, because we cannot just increase the manpower very fast. So that's where the machine built virality index came in picture, that here is a Twitter person or somebody who's posting on Facebook has a lot more potential to get followed or spread like a wildfire. Then this is a prioritization that machine can offer. Humans running through one by one will never reach there. That was around the efficiency. A second example of efficiency was, for example, all the voice transcripts we had. We will have this quality team which will read that offline and try to see if the agents are handling things all right in this center versus that center. Now that is not a very difficult job, even if I can listen to the entire tonality, and I'm yet to come on a voice to text or anything else actually, but you can read through a tonality and you can figure out whether the conversation of the agent was cut in between or whether he was angry while he was speaking, and it's irrespective of language also. It's beautiful. It's not very tough if I don't get into the text to speech ecosystem. And we were immediately able to do a first filter in which we knew that here is a set of conversations which are really good. There is no need for any humans to go and sit there. It's like a couple of examples around this first set. The second set, I'll talk about what I call as a process intelligence. So take, for example, one of the biggest problems that we suffer, for example, in our own industry, in online retail, is people order and they don't take a delivery. And this goes back to our fulfillment centers. We call it like a return to origin problem statement, and we just end up paying for logistics, so the company pays. Now, we have started to look at the trends of the past. We have started to look at the profile of the every customers, and we were eventually able to proactively stop a sale to a certain customer where we were very sure that more often than not, he was not picking up my delivery. Over there, when we started to see more pain, then we deduced that the chances of the people who do a prepayment, and this is something different in India, we have a cash on delivery as well as a prepaid instrument. We said that most often than not, the guys who are paying beforehand are the ones who are able to actually receive it. So we put another filter onto that, and they said, okay, fine, we'll permit those guys as long as they are making a prepaid payment versus somebody expecting just a delivery and pay a cash later on. Now that thing alone was able to improve our EBITDA by like 2 percentage points, which was huge in the terms of the very fine margin. Another big process example which I said was, we all have worked with these IVRs and agent centers. Now IVRs have like 5 or 6 options. And trust me, nobody clicks the 5th or 6th option. We built a very nice data ecosystem. It will give us the right 6 options for every customer, but still nobody was pressing 5 or 6. You do one machine learning, a statistical analysis, and you figure out which options are generally clicked more, and you switch on that, change that pattern of the options, and you will start to see a more self-serve happening at the IVR itself. What you see immediately, your agent count of 4,000 is now reduced to 3,500, and this is a huge cost that we pay while we do our own online retail business. The third example which I was talking about is from my current job that I'm trying to solve for. We have a customer base of like 100 million plus people. Out of them, close to 60 million of them are actually monthly active. And we also have an inventory of over 35 million products and listings. Now, how do we really figure out that which products I show them on a homepage? Try putting an entire army. It will not be able to. You will have very strong inefficiencies. I will keep on seeing stuff that I don't want you. You try to put a complete real-time online click-through rate optimization, which can then give a signal that here is what we show it to this customer. And you start to see a basis point improvement cycle after cycle in terms of the eventual conversion that you do on the cost of the same listings I had, the same customer base, same logistics, and I'm suddenly able to do it more. I mean, I'll stop here because I can go on and on with examples which are spread around in the online retail, especially trying to do it at a scale with online. So I'll just stop here.
Those are great examples. I mean, it really shows how even for a single industry, for a single business, how many different sorts of cases there are. Carl or Jonathan, anything you guys want to throw in?
And look, there's specific uses in the investment banking world, but or in the banking and financial services arena specifically, especially when it comes to RPA and machine learning. If you can think about the billions of trades that are done every day, that at some level some human has to approve things. And I think that's maybe a good segue there is one of the issues we have in these large regulated environments is how far can we let AI make decisions or that need human approval or authenticity. So obviously there's millions of uses for it in the financial services arena, and that's what Justin is doing, right? So as he can tell us.
I think just to add to that, there are millions we've made a lot of mistakes. Look at the flash crash. That's a great example of what happens when machines take some very simple instructions and we haven't fully accounted for all the conditions that may trigger some of those events. And we've had lots of mini flash crashes in the last decade since we've begun to really automate a lot of this algorithmic high-frequency trading. And we've seen you get a number wrong when you set a credit limit at the wrong level, or simple setup of reference data by operators, and then that data is then used in an automated system that can throw a whole system awry. So I think there are a lot of risks with this, and I think that's why I think incrementalism has been the way we've approached it. There are a lot of great visionary people who've seen where we can go with this, at least on the Wall Street side of things, but there have been a lot of the sort of the road to that success is littered with lots of bodies and mistakes and lost fortunes as people have over committed to some solutions that haven't been as successful. But I think there's so much promise, and I think it's the sort of the incremental progress that is going to lead us to we're accelerating. The rate at which we're adopting and proving some of these techniques is accelerating, and I think it comes back to the data and the use of the data and the measurement of success and the measurement of how we can or where we've been able to use automation to improve efficiency.
Yeah. And, a lot of it comes down to sort of what is the problem we're trying to solve for. For example, a use case like product recommendations or the idea of a recommendation engine, in advertising or on Netflix, the stakes are relatively low. If it's a recommendation engine around a medical treatment or a diagnosis, that has much higher stakes and sort of much more mission critical. So one of the interesting things about this technology is some of the same techniques or broadly speaking applications, which is a recommendation engine in this case, can have very different regulatory implications, life or death implications, financial implications. I want to get into a little bit around business impacts, and also, with just in the interest of time, an eye for our audience of sort of how to get started. How can we jump into this? So in terms of a question, we look at impacts. We've talked through a lot of different cost savings, efficiency gains. What about in terms of net new revenue generation? How to think about some of those problems? And then also, as perhaps a separate question, what are some ways to begin working in the space, to begin experimenting, to begin pilots?
Can I say one thing really quickly, Jess, about your last point, the recommendation engine concept, and I think that goes to the data again, and it goes to the agreement between all the parties on classifications and the agreement on descriptions of things. So we think about industrial classifications, which industry are we in, and you have a chart in some of the work we've been doing with you to set up for this conference about which industries are automating, and I think that's the beginning of the agreement. There's
Yep, Justin, we can't hear you anymore.
Yeah, neither.
Can you hear me now? I'm sorry.
Yes.
The concept of a generally accepted classification that we all agree is there are dimensions that we use to describe products and services. And then if we agree on those classifications, then we can come up with recommendation engines. But first we have to agree that there is a sector called information technology and a sector called automotive. You may call it something else, but we need to have those standard data sets to agree on, and then we can begin to automate them.
Yeah, data standards. Great point.
Sorry, I interrupted you.
Oh, it's great. It's an excellent point. And a good step, I think, in terms of sometimes what we call phase zero, naming and labeling and tagging, categorization, really at the very basic level, making sure the data that are going into these systems are good data. Trash in, trash out, as the old axiom goes, and the same is true here. Other thoughts on new revenue generation, on steps that we can take as we sort of begin to explore this within the context of our businesses?
Sure. From online,
I think there's money everywhere.
sure, go ahead.
Go ahead, Jonathan.
Go ahead, Jonathan. Yeah.
No, it wasn't me. I was the only one not speaking.
Oh, okay, maybe Carl then.
Mm-hmm. I was going to say there's money everywhere. I think the measurement, the quantification of procedures, and which help, to Jonathan's point and to Carl's point, the identification of those areas where we can automate things and simplify process. I think there's monetization by selling the recommendations or by building tools to help consumers and purchasers, industrial purchasers, identify the right products to buy and reduce the inefficiency in the procurement and supply chain management process. I think it comes down to measurement and quantification and indexing of things that we care about so that we begin to see patterns, and then we can begin to automate those, the use of those patterns or the procedures around use of patterns in typical business process.
Sure.
Sean?
So I'll go ahead with explaining something that is a clear-cut revenue generation, and will add on to what again Justin mentioned on recommendations. Now imagine this, right? Our online retail site, Flipkart.com. I mean, I have merchandising, I have recommendations, I have what we call it attach, which is frequently bought together. I have the marketing channels. In fact, this is what we are building right now. Is imagine now, right? If I can have the data interconnected through all these touch points, which individually touch the customers. But if I can do that, then what's possible for me is if a person is opening the email but isn't really coming on my home page, I can add this nudge on the email that I have something exciting for you onto the home page. If the person is, I mean today, right, our marketing tools give us like more than 10% of the business, for 35% comes from recommendations, 45% from merchandising, but each one of them will see a strong step jump if I change the optimization ecosystem from being local to each one of them to being a global one. And that alone can again, I mean, I don't exactly, because it's a work in progress, but we are shooting for at least 15 to 20% of revenue jumps on the same ecosystem that we have got today. You can combine frequently buys together with marketing, with merchandising, and it becomes like one channel which touches the data points of all the customers. Or for example, if I touch this data also with my customer care data, then what's possible if a customer is angry at a certain product, I will never send a marketing campaign to them because that can piss them off even doubly more and they are not likely to come unless until I really address their problem first. I mean, that's where the revenue generation piece comes in and that's where machines will start to take over. But now, part of this journey, and I could not agree more with the rest of the, I mean, especially Justin started with, it's like, let's not get started with the AI if you really want to build this. You need to get started with looking at the data, the availability of the data, the structure of the data. If you end up gonna, do bridges with 5 ecosystems which are disparate, have a different nature of data, it can be a very difficult journey as you move along. Actually, a lot of time can get into managing the integrations. Where you need to start is that do I have my data in the right form, is easily accessible, because I'm talking about terabytes of data being transferred maybe every day across different of these ecosystems. You look at your physical hardware, you look at your data storage, you look at the structure, you make a historic idea, and maybe just come up with the automations first, which is like launch each one of them independently. If you have launched each one of them independently and you have the control and access to the data, then you can start problem solving on top of it, which will create the largest step jump. If you start with so don't look at the flows, look at what data you're generating, and then that becomes the most strong trick to go ahead. And one little thing I will add again is, I think, is around being very specific to the problem. AI as a field is coming up. It isn't as mature as, let's say, a MySQL, which was in a similar phase 20 years ago. We had issues all over the place. We used to tune the databases. Now, be specific. If you're trying to solve a problem, solve that problem versus getting into, I will have a generic robot which can just solve everything that you ask for it. You may end up spending years into it and it may not really solve what you could have, and the market opportunity can go away. Get the data, solve for that problem, and you are going to actually see improvement which can seriously be helpful to your use cases in any industry, at least at this stage. Till probably in 10 years time, we can have a very strong AI bots around. That's all.
I think this is excellent advice. Take notice, audience. Really, starting small, starting with a very well-scoped problem is essential. I do want to take this time. We have about 6 minutes left. Audience, please feel free to ask some questions in the Q&A box on the portal here, and we'll do our best to get to some of these questions. Now's the time. Don't hold back. In the meantime, as perhaps some of those questions are coming in, one thing we haven't touched on so much are some of the human issues. Ironically or not, as we talk about automation and AI technology, sometimes humans cause the biggest friction, or sometimes humans have some of the biggest roles in the development of these systems, maybe the rejection of these systems, implications around all sorts of different things, privacy, bias, sentiment, etc. So I wanted to ask the panel, just as we're waiting for some questions to come in here, what do you see? What have you experienced as some of the just important to remember human issues that have come up, can be positive or negative, in some of your work here? Decision making, consumers, employees. Any anecdotes or thoughts there?
I think one thing I found is it's always important to make your partners feel like that the ideas were theirs. It's important to, everything okay? To make sure that they get credit for their ideas, and even making the idea theirs is very valuable. Just a thought.
I think this is Jonathan. I think one thing to consider from that human interaction is there is sensitivity. I know that everyone thinks that Wall Street and Sand Hill Road are a bunch of, all they care about is money. But if they're looking for AI implementations or software or technologies that will not necessarily, cause massive layoffs, but more how to make those employees be more efficient on either that revenue side or on just the bottom line side. So they don't want to invest in companies or technologies which automatically are classified as head cutters, right? Because they want, those investors want to, I'm not saying they always want to do good for everybody, but they don't want the opposite, right? They don't want that stigma of, hey, you only invest in technologies that cut half of human capital, and we don't like you, and they certainly don't want to see their name in the Wall Street Journal or any article, The Economist, that says, hey, that's what this fund is known for. So even though there's sensitivity around it, I would always say that that investors are looking for efficiency and more revenue than necessarily only the bottom line by cutting people. Just trying to be humanistic.
Yep, it's important.
I think the great thing about using money to measure is it's a common factor.
Yep. We are in the last minute here. The only thing I would really add to that is one point, human, technological, and business that is relevant. That this is not a set and forget initiative. It does take ongoing maintenance. It does take ongoing analysis of algorithms themselves, how they're working. Audits for this, I think, is a new space to where many jobs will be relevant. We did get a question in, Justin. I think this will go to you. ISO 8000. Can you just give a brief description of what that is, and then we'll jump.
Sure. ISO 8000 is a new standard. It's not new, actually. It's been around for about 10 years. It's the next generation of, it's an extension of ISO 9001 we've heard a lot about, and a number of other ISO standards, but it's really the definition of master data and data quality, which is used for control purposes. And it's used in every automation project you will ever be involved in. Is going to involve the use of master data. And so ISO 8000 there are a number of parts to it. I'm involved in 2 pieces of it, but it's a very big thing, and it's a very interesting standard, and it will probably touch every industry and every, especially the manufacturing and large heavy industry. But it's a method of, again, measuring and standardizing the data used to describe the parties and the products involved in commerce.
Great.
Really portable.
All right. Well, I think that brings us to the end. Sorry, Justin. I think that brings us to the end of our time. A big thank you to Jonathan Gazdak, to Justin Magruder, to Prashant Kumar, and to Carl Boutte. I'm Jessica Grootman. I hope this has been an insightful last 50 minutes for you. Please feel free to connect with us through the app or offline. And thanks very much, everyone. Have a great rest of your day.
Thank you, everyone.
Thank you.
Insightful to listen to everyone. Bye-bye.